It's the greatest time of the year. It's time to start preparing for and filing our taxes. I'm going to help you make it simple, easy, and help you start planning for next year. All in today's episode. Welcome, new and returning Money Buddies. I know you might not be as excited about taxes as I am. You probably haven't checked your employer portal for your W-2 10 times by now. And while I may be a little crazy and you might not be that excited, guess what? You don't have to dread filing your taxes. It's an exciting topic for money nerds, but it's not exciting for everyone. And today you're going to leave today's episode with a very simple system for organizing, filing, and planning for your taxes. I'm even going to help you with a recommendation of the tax software that I use myself. Guess what, taxes don't have to be this big, scary, complicated process, because during my CFP education, taxes were one of the most exciting and interesting areas to me. So I'm excited to pass on this knowledge, and I'm excited to give you a little bit of education that can go a really long way. Yes, taxes are made to be more complicated so that we have to pay people to help us with them, but it's also a system that's easier than you think. And I promise you, you can learn it. And you can save a whole lot of money on your taxes with the stuff that we're going to talk about in today's episodes. So I'm going to help you out today and teach you about the information that I learned in the CFP coursework and how it taught me to think differently and to think about how simple taxes can be. So let's make it really simple in today's episode and help you get started with a crucial financial planning area that can save you a lot of money. Do you know how taxes work on your very next dollar? It's a lot simpler than you think. We're going to tackle that as well as the myth of owing more taxes if you get a raise within today's episode. But we're going to get started here by setting up this whole picture. Let's paint the picture for you. I know taxes can be super complicated, right? Trust me, it's going to be very hard for me this episode to stay off my soapbox about how tax companies lobby to keep the tax system complex so that they can make money off the process. There's a giant industry built around taxes being complicated, but I'm going to try really hard to stay off that soapbox today. But there are a few main areas that can be easily learned and understood that can make this process a whole lot easier for you. The main things that I've found that people need help with are organizing yourself to prepare to file your taxes, how to actually file your taxes, understanding things you can do now to improve your tax situation, preparing for and planning for things that you can do in the upcoming year for next year's tax return. And I'm even going to include some common mistakes and some that I've even made on my own. We're going to cover that in today's episode. And of course, we have a great case study lined up for you here. But let's get to the main meat and potatoes of today's episode. How do you actually get started with filing your taxes? That's where we're going to start here in today's episode. This first article with 6 tips for organizing your tax information comes with a couple great ideas that I want to share with you. The first 2 things that we're going to touch on today are designating an easy access place for your documents and grouping your tax documents by their category or form number. I use and I recommend that you set up a Google Drive or a Dropbox or OneDrive, whatever platform you want to use, create a finances folder, and then within that folder, create a folder for each year. So if you're starting with your 2025 taxes, create a folder for 2025, and then use that location to house that year's documents. And then as you go through the year, create a 2026 folder, and you can house 2026's documents and so forth into 27 and 28 and so on. This is also how I save receipts for our HSA. Within that year's folder, we have a tax documents folder and we have an HSA receipts folder and whatever else may come up that's financially relevant. As I'm saving these documents, I like to and recommend naming each document with the form name and the account name so that you know what it's tied to. When you go to look it up, you can find it very easily because it'll be in the right folder for that right year. So you just need form number and account name. Another thing that you can do to get started is use last year's return as a great place to get started to know what documents you need to find. You can quickly see what info you need because it's very likely you're going to need the same info and a little bit more. So it'll be really quick and easy to say, yeah, I need this form and this form and this form because it was on last year's tax return. And if you've switched tax software or you're filing taxes on your own, you're likely going to need some numbers from last year's tax return. So it's a great thing to also save when you finish filing your taxes, put it in that 2025 folder so that you have it for next year and you know exactly where it's at. Next, I want to talk about how to do your taxes with a step-by-step guide from accounting.com. The quote here from this article that I thought was especially relevant is to make sure you choose your status correctly, make sure you gather your documents, and the specific documents that you'll likely be looking for is your W-2 or 1099 forms. The W-2 is your employment income and the 1099 is any other income. There's a lot of different 1099 forms, but don't worry about that too much. Just know if you get a 1099 form, that's income. And then choose your software. The software is going to walk you through the step-by-step process. And this episode, it's not an ad for a tax software, and I don't have a tax software that I earn a referral from or anything like that. So I want to give you a recommendation of what I use for filing my own taxes. I use FreeTaxUSA. I've used them for years. It's easy and federal returns are free. The state is super cheap, and it's going to help walk you through a lot of the steps. It's not super complicated. The software knows all the right questions to ask. So that's the one I recommend, but choosing software is going to help you with going through your tax return step by step. It's going to know the best way to walk you through it, find all those deductions, credits, and whatnot. Trust me, if you're listening to this episode, you are smart enough to use this tax software. It's not complicated. It's very easy. So just choose one and go with it and stick with it every single year. That's why I like to use FreeTaxUSA, because it remembers some of those numbers that you might need to look to your tax return for. It's super easy and simple. But now I want to talk about things that you can do right now. What if you're in the middle of filing your taxes or you need some tax savings ideas right now? What are some things you can look towards? Well, one of the main ones is a student loan interest deduction. You might be able to get up to a $2,500 tax deduction. Of course, there's income limits, so make sure you check on those, and they may change from year to year, but just know you may get a tax deduction for your student loan interest, and this could be a great benefit that you weren't aware of. Your student loan provider is going to give you a document that says how much interest you paid throughout the year. Make sure you save that within your folder. And another thing that you could do right now, consider this if you owe just a little bit of money. This is a great tip that my wife and I have used as we've owed a few $100s. You could consider contributing to last year's traditional IRA limit if you're within the deduction income limitations. You could consider contributing to last year's HSA limit if you are eligible and qualified to contribute to an HSA. This will reduce your tax bill since those contributions can be deductible. I've done this for several years in a row to flip our tax bill from owing a little bit to getting a refund, and it's super handy and super nice. So just remember, you can contribute to an IRA or an HSA for last year. So at the time of recording this in 2026, you can contribute towards the 2025 limit up until the tax filing deadline in 2026 and so forth going forward each and every year. It's a great strategy that you can get in on, especially if you weren't able to max it out right at the end. You might be able to as we move into the next year, and just know you can contribute for last year's limit. Instead of contributing towards 2026 while there's still some 2025 left over, make sure you contribute it towards last year's limit so that you can make sure to take advantage of it as much as possible. But what do you do to plan for next year? Well, go back and listen to episode 9 of the podcast, where we were taught about taxes because we've never been taught about taxes, and I wanted to help all of you fix that. It's a great episode to go back and listen to. There's a couple things worth researching and asking about. The two main things from that episode that you could use towards next year are capital gain and capital loss harvesting. This is if you have a taxable brokerage account, you might be able to get your gains out of the account tax-free. And if you have losses in the account, they may be able to help reduce your taxable income. There's many case studies in that episode that dive into how to use those strategies directly. So be sure to go check out episode 9 of the podcast. The link is in the show notes. And then some other ideas to plan for next year. Make sure to review your W-4 if your tax situation surprised you. If you got a massive refund, go review your W-4 and adjust that. If you owed a ton of money, go review your W-4 and adjust that. Or if you have kids or buy a house or anything like that, it's a great opportunity to go and review and update your W-4, which is the form telling your job how much money to withhold from your taxes. Another thing you could do as you go throughout this next year is set a reminder to review your brokerage account quarterly. See if there's any opportunities for some tax gain harvesting to raise your basis, or if there's some losses that you might want to take to get out of a position, to move into index funds more. There's a lot of great opportunities that you could do throughout the year. It just requires a little bit of forethought and planning around it. And if you set some simple and easy reminders, then you're going to remember, and you only have to do it once or twice or a few times throughout the year. I did promise we would get to some common mistakes, so there's a TurboTax article that I want to reference here with 6 common mistakes when filing taxes. I'm going to give you all 6, and then I'm going to talk about a couple that are a huge deal. So 1, there might be a math error. 2, choose the right filing status. 3, you might miss out on tax deductions. 4, forgetting important paperwork. 5, entering the wrong routing or account number. And 6, paper filing blunders. And of course, this article really hits on the key mistakes that you can make if you're trying to file with a paper option on your own. And of course, that's because it's a TurboTax article. And now I don't recommend TurboTax because they're one of the main players in why we have such complicated tax returns. But I did say I'd stay off the soapbox. So let's get on to the two that are the biggest deal for me. Number 3 and number 4, missing out on tax deductions and forgetting important paperwork. This is a huge deal. You don't want to file too early. I've almost made this exact mistake before and missed out on some important paperwork that was delayed because I didn't even think about it because it was the first time I was having to deal with an HSA. And it would have been a huge headache to fix. So make sure you wait, be patient, make sure you have all your documents for any account that could have paid you money or that can have some sort of tax implication on the money you're contributing to it. The other mistake to be careful of is over-contributing to your IRA. Be very, very, very careful of this. I have made this exact mistake. And this is why simplicity and just having one account is so beneficial. If you're spreading your IRA contributions between multiple accounts, it can get very dangerous. And that is what happened to me. I was in between moving my IRA contributions from M1 Finance to Fidelity, and I didn't keep perfect track of how much had been contributed where, and I ended up over contributing a few years ago. So make sure you just have one IRA account because that limit applies across however many IRA accounts you have. It is your IRA contribution limit, not your contribution limit at every single different brokerage company that you can have an IRA at. So be careful with your IRA contributions and be patient when it comes to filing your taxes. But how's the episode going so far for you? Do you have any questions? If you do have any questions, please send me an email. Let me know what is the biggest tax question on your mind. But so far we've covered how to organize your taxes, how to file them, how to understand things to improve your tax situation now and in the future, and we touched on a couple common mistakes. Next, we're going to look at a case study with Alex and Jordan, talking about how they filed their taxes, they owed a little bit of money, and they felt like they failed. We're going to get into that next. Today's case study is going to be about Alex and Jordan. They make $167,000 per year combined. And to give you some background on them, they got married in 2024. So their 2025 taxes that they're about to file will be their first time filing joint after being married a full year, and they're confident this will make their situation simpler, and honestly it will. It's a little bit easier once you've been doing your finances together for a year. But for their situation, well, tax season arrived, and like most of us, there's one person in a marriage who likes to do taxes or likes to manage the finances, but their documents were scattered. And this is something that I think all of us have faced. There's some paper W-2 forms. You got some bank statements you don't know if you need. You got a random 1099 form from Venmo or some other random account you've never heard of. And it's all in a shoebox or a folder or a binder or whatever. And you've been keeping it throughout the year, but you're not sure what to do with these forms. So Alex and Jordan have a situation just like so many of us. But last year with their taxes, to kind of paint you a picture of how they're feeling about filing taxes, well, they owed $350 last year, and they don't want to owe again because it feels like a failure, right? It wasn't a devastating bill, right? $350 isn't a huge amount of money, but it was a bill. Alex wanted to avoid that this year, but didn't really think about it until now, in 2026, when it's time to file their taxes. They didn't want to, quote unquote, fail at their taxes again and owe money. Well, they had some big realizations this year. They had a taxable brokerage account that had some capital gains that they started when they got married. They're not sure how to use this money, and now they're worried, are they going to owe money on the gains that are sitting in the account? How do they handle that with their taxes? Also, Jordan changed jobs, and their withholdings were not updated correctly. Is that going to cause them to owe? Is that going to cause some big problems? They also both contributed to an HSA this year, but they didn't keep super good records and they didn't max it out. So they're wondering, what can they do with an HSA account? And of course, you might be curious or thinking about an IRA, since we've talked about those already in this episode. I'll make sure to touch on that. But they didn't max out their 401k accounts either when they probably could have. So where do we get started with this case study? Well, to set all of this up, we got to begin by organizing our documents. For Alex and Jordan, they don't need every single statement they've gotten in the mail. Each account will likely issue you just one tax document that they're also sending to the IRS. That's really all you need. Here are some of the main documents that you might need that you want to be aware of. If you have a regular job, you're going to have a W-2 form that's likely going to be available on an online portal or probably come in the mail. If you have any sort of investing accounts or you're making money in any sort of other way, you're going to get a 1099 form. There are different types of 1099 forms depending on where the income came from. It'll be different if it's from a self-employed side hustle kind of thing, or if it's from a contract gig that you're doing, or if it's from a retirement account. They're all going to be a different little letter at the end. You might also get a Form 5498 for tax-advantaged accounts that you're contributing to, but just note that that account might not come until May, and that's because you can contribute to that account type until April for the previous year. So just know that you won't really need that form. You'll need to report how much you've contributed, but you can see that on the last statement of the year, or you can log into the account and just look. It'll have that information readily available. But just know, in this situation for Alex and Jordan, and likely in your situation, if you haven't already maxed out the account, being able to contribute to the account until April is going to be a big benefit. And we'll talk about that in just a moment. But getting organized and getting started with this is going to be a huge deal. Use Google Drive or another app and save everything digitally. Most times you can download the form from your account and turn off the paper copies being mailed to you so you don't have this thick stack of stuff that's just going to go in the trash. And then as you're getting started here, choose your software that you're going to use. Choose one on your own, but if you want an easy recommendation, I like FreeTaxUSA. It's been great for me, and I recommend it to everyone. But now as we're moving into some of the habits towards filing your taxes, just follow the software, keep it easy, and do what it says. But the habits can really come into play for next year. Preparing for next year is where this becomes a whole lot easier and can be a whole lot more beneficial towards saving you money. So we're going to address here in just a moment some of Alex's questions and other concerns, but now that your digital system is built for the year, set it up for next year. This is one of the best habits for tax planning and preparing to file your taxes and staying organized. So take that folder that you just created and copy the structure over for 2026. Create a 2026 folder, put HSA receipts in there, put tax documents in there, put account statements, whatever you want to keep, put it within that year's folder, and then it's easy to save them all. And now that you have a system set up for the next year, it's going to be way easier to stay organized throughout the next year, thus eliminating the headache when it comes to beginning to file your taxes next year because you know everything is already in the right place. So now let's move into some of Alex and Jordan's main questions and common concerns and figure out how does all this play out when it comes to filing your taxes. Let's talk first about their taxable brokerage money. They have some money that's grown, and it's likely you have as well after this last year of stock market returns. But guess what? You're not going to owe taxes on it until you actually sell the asset and realize or claim the gains. But this is where you may be able to capital gain harvest if your income falls within a certain threshold. I am going to make a supplemental video about capital gain and capital loss harvesting that's going to come out on YouTube later this week. So be sure to go subscribe over there if you want to know how to use either of those two strategies for the next year. Now, the other thing that happened to Alex and Jordan and likely happened to you as well is maybe you changed jobs throughout the year. And let's say you ended up getting a massive refund or owing a lot of money. That's when you need to update your W-4 right away. If you've had any other major life changes, update your W-4. You don't want either situation of a massive refund or owing a lot of money to happen. You need to make sure your W-4 is accurate. There are now great tools that have come around in the last 5 to 10 years that are going to help you figure out how to update your W-4. So just look that up, and it's a real simple and easy process. The other thing that I mentioned we would touch on is contributing to an HSA or an IRA for last year. This is a big deal. You can contribute to either of these accounts until the tax filing deadline for the previous year. So we're here in 2026. Until the tax filing deadline in 2026, when your 2025 taxes are due, you can contribute to either account for 2025. This helps a lot because in this case study, we saw that Alex owed a few $100 for their taxes, but they didn't max out their HSA or even contribute to a traditional IRA. And while they may have too high of an income to be able to deduct those IRA contributions, make sure you look this up for yourself. If your income is getting very high, please reach out to me if you have questions because you don't want to contribute to a traditional IRA if you were expecting the deduction and then not be able to claim it. But there are no income limits for an HSA. So they could contribute about $1,250 if they're within the 24% bracket and get about a $300 deduction and save on their taxes. Now, your math may vary, of course, and this isn't specific to your situation, but using this knowledge to your benefit can help you get so much closer to that perfect tax return. If any of you get a tax return of $0 this year, please let me know. I would love to celebrate you on every social media platform that's out there because that's a big deal. So let me know if you get a $0 on your tax return because I'd love to meet someone who's accomplished such a marvelous feat. The main insight from today's episode and from this case study is to start planning ahead. You could start contributing even more to your 401k to lower your tax bill further throughout the next year. You could lower it now and then use the extra HSA contribution next year as a way to even get a refund. Make sure your withholdings are where you want them. You don't want a massive refund, or you don't want to owe a ton of money. And yes, I know taxes are complicated and they really shouldn't be, but I successfully managed to stay off that soapbox throughout this whole episode. But unfortunately, it's our reality. And we have to learn how to manage our tax situation and how to plan for it and how to file our taxes. I really hope you enjoyed today's case study. This case study showed us exactly how you could turn that frustrating tax bill into a planning opportunity and potentially into a refund. I have one more thing for each of you here in just a second that's going to be super easy for you to take action on from today's episode. Today's one action item is to start gathering your tax documents and save them in one place. Start a Drive or a Dropbox folder, name each document with its form number and account name, keep it all in one place, and start working on your taxes now. But do you know how taxes work on your very next dollar? It's a whole lot simpler than you think, and we're going to tackle the myth that's out there of owing more taxes just because you got a raise. And in a second, I'm going to give you that little secret, but first I need you to share today's episode with a friend or a family member. We are all going to have to do our taxes this year, and this episode makes preparing for them a whole lot simpler. But now let's bust the myth of paying more taxes just because you got a raise. And this leads us into a marginal versus effective tax rate discussion. Marginal is the amount you owe on your very next dollar, and effective is how much you're actually paying, which is your tax paid divided by your total taxable income. Your marginal might seem really high and you think you're paying 32% in taxes, but you're only paying 32% on your very next dollar. Your effective tax rate is going to be much lower. And this is what helps everyone realize that you're not suddenly going to owe a ton more in taxes just because you get a raise. Only your very next dollar is taxed at that higher tax rate. The rest of your money is still taxed at lower tax rates throughout the entire tax bracket range. But if you need help identifying your tax rate or figuring out some tax planning opportunities for next year, or if you're not sure what to even ask, send me your biggest tax frustration or your biggest tax question, and I'll help you turn it into an action plan. I would love to have a chat with each and every one of you. So how do you take me up on this? Well, shoot me an email with your tax question, and then we'll walk through how you can make your taxes simple and easy to understand. Head over to the show notes, scroll to the bottom, find my email, click on it, and send me an email with your most pressing tax question. Next week is all about understanding credit and the credit score. We're going to dive into the different little teeny tiny things that go into your credit score. We're going to also talk about managing credit in a healthy and good way, because do you want to chase that perfect 850 credit score? While it might not be necessary, it might be a goalpost. So we're going to talk about the credit score next week. So make sure to subscribe and stay tuned for next week's episode. And thank you for listening to this week's episode of Financial Planning for Young Adults. I'm your host, Skylar Fleming. Have a great week. And hey, quick heads up. This podcast, it's meant to be educational and it's for entertainment purposes. It's not personalized financial advice for your specific situation. So before you go out and make any big money moves, make sure you chat with a qualified financial professional who knows your full financial picture.